Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to analyze Nvidia stock. Specifically, I'm going to talk about why I think Nvidia will likely surpass Apple and become the second most valuable company in the world, right behind Microsoft. At the time of making this video, you can see that Nvidia's market cap of 2.7 trillion is very close to Apple's market cap of 2.9 trillion. Apple is still more profitable than Nvidia, but Nvidia has been growing much faster than Apple in recent years because of several reasons. First, Nvidia is benefiting the most from the current AI boom. Almost all the major tech companies, the largest enterprises, and the largest cloud providers are investing in Nvidia's AI accelerators and AI software platform because they don't want to be left behind in the current AI revolution. Second, there's a major shift in IT spending now. Many CIOs are shifting their IT spending from enterprise software to more AI spending. This impacts large enterprise SaaS businesses such as Salesforce a lot. Third, many AI startups and tech companies are buying more AI GPUs from Nvidia because they want to train and build their large language models (LLMs) and deploy them as soon as possible in order to stay competitive. So in this video, I will explain why I believe Nvidia will likely surpass Apple soon and become the second or even the most valuable company in the world. I will also explain whether Nvidia's growth has peaked yet. I will talk about these topics in this video. First, I'll give you a quick stock portfolio update. Then I will talk about Nvidia's biggest risk to consider, Nvidia's long-term growth prospects, Nvidia stock valuation, and will I buy Nvidia stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos a week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing in for the long term, follow my personal stock portfolios, watch my investing tutorial videos, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. If you have been following my channel, you may notice that I've been very bullish on Nvidia's long-term growth for over 2 years, even before ChatGPT came out. I made several mistakes in my previous Nvidia stock analysis videos. For example, I underestimated Nvidia's revenue growth even after ChatGPT came out in November 2022. If I had known about ChatGPT earlier, and if I understood how disruptive generative AI would be, I would have given Nvidia a much higher intrinsic value in my previous videos. My second mistake was a personal one. I've been very bullish on Nvidia for several years already. In fact, I bought Nvidia stock over 3 years ago, even before ChatGPT came out, but I sold Nvidia for a quick profit because I thought that Nvidia was becoming overvalued. I was wrong. In hindsight, Nvidia was in fact greatly undervalued back then. After I sold Nvidia, I reinvested the money in other semiconductor stocks such as TSMC and AMD that were more undervalued before. Both TSMC and AMD still gained a lot over the past 3 years, but if I kept my Nvidia shares, my gains would be even higher. Over the past 1 year, I bought back more Nvidia shares, but of course at much higher prices than before. I want to give you a quick stock portfolio update here to show you my investing strategies over time. This is one of my stock portfolios. It is separated into 3 different accounts. In this first account, you can see that I have several very large winners here: MasterCard, Microsoft, Visa, Amazon, Google, TSMC, and ASML. Some of them are already multi-bagger stocks. This account continues to perform very well compared to the S&P 500 because I only invest in the best tech companies that are the market leaders in their industries. And most of them are large caps or mega caps. I don't invest in speculative stocks. I only invest in the best businesses that have large economic moats, great management teams, great long-term prospects, great products and services, increasing earnings, and increasing free cash flows over time. Also, I don't diversify. I like to concentrate. In my opinion, diversification does not make sense if you know the businesses you invest in. It doesn't make sense to have over 20 stocks in a portfolio. I believe it's much better to concentrate on the best businesses that are most profitable and buy them only when they're undervalued. This is the second account. This account is also performing very well, beating the S&P 500 by a very large margin. I decided to rebalance this account recently because I want to be more concentrated on the best businesses. For example, I sold my Adobe shares and made a decent gain of 18%. Then I reinvested the money to buy more Amazon shares. I bought back more Nvidia over the past several months. This is the third account. This is a newer account. I bought many of these stocks over the past 12 months. I made the mistake of over-diversifying and buying too many stocks in this account. So I'm in the process of rebalancing this account to make it more concentrated like the other two accounts. For example, I sold Broadcom and Intuit Inc. and made these realized gains. Then I reinvested the proceeds and gains to buy more Nvidia recently. I expect this account will also have many multi-bagger stocks over the long run, but of course it will take time for these outstanding businesses to grow exponentially over time. Getting multi-bagger stocks doesn't happen overnight. Now, going back to Nvidia, I want to talk about Nvidia's biggest risk first before talking about Nvidia's longer growth prospects and its biggest competitive advantage. So what is Nvidia's biggest risk going forward? The biggest risk or the biggest concern is whether Nvidia's growth has peaked yet. In recent months, since ChatGPT came out, Nvidia has had very high triple-digit growth rates because of the enormous demand for generative AI and because of the very large demand for Nvidia's H100 and H200 that are used for training and inferencing large language models. Realistically, Nvidia's triple-digit growth rates in recent months are not sustainable. Nvidia's revenue growth will eventually slow down to more reasonable levels. This is my prediction. I believe Nvidia's revenue growth rate should peak in 2024. Nvidia's total revenue was around 61 billion last year. This year, Nvidia's total revenue is expected to reach slightly over 115 billion. Going forward, Nvidia's revenue growth will slow down to more reasonable levels once Nvidia's largest customers have built out their IT infrastructures. If I have to make an educated guess, I believe Nvidia's revenue should grow at double-digit rates over the next several years, starting in 2025. The market already expects that Nvidia's growth will slow down to more reasonable levels over the next several years. Beth from IO Fund is one of the few analysts who predicted that Nvidia would become one of the most valuable companies in the world because of its market dominance in AI. She predicted Nvidia's very large growth potential in AI even before ChatGPT came out. Recently, she made this revenue forecast for Nvidia. She expects that Nvidia's growth has already peaked. Going forward, she expects that Nvidia's revenue growth will likely be in the double digits over the next several quarters. Nvidia has these 5 major business segments: data center, gaming business, professional visualization, auto business, OEM, and other. Nvidia's AI data center business contributes about 87% of the company's total revenues, while Nvidia's gaming business contributes about 10% of the company's total revenues. The semiconductor industry is by nature very cyclical. The entire industry always goes through many boom and bust cycles. Right now, I believe we're still at the beginning of the AI boom cycle. Eventually, there will be an inventory correction, similar to the boom and bust cycles in the past, if companies invest too much in AI infrastructures and do not generate enough returns from these AI investments. I think it's very important to understand this boom and bust cycle, which is very common in the semiconductor industry. Right now, many AI startups, large enterprises, and major tech companies are still figuring out ways to improve their productivity and increase their profits using generative AI and advanced AI models. Based on what I know, only a few companies such as Nvidia, Microsoft, OpenAI, and Google have figured out ways to increase their revenues and productivity using generative AI. Most AI companies are still losing a lot of money. If Nvidia's data center customers invest too much in Nvidia's AI GPUs and realize that they cannot generate enough profits or increase their productivity enough to justify their investments, they will eventually slow down their AI spending. Again, I believe we're still at the beginning of the AI revolution. I don't think we have reached the peak yet. Here's the deal. Many investors compare the current AI revolution to the dot-com bubble in the late 1990s and early 2000s. It's true that there are thousands of AI startups that are still losing a lot of money. Most AI startups are still finding ways to build their AI apps, develop their business models, grow their revenues, and hopefully become profitable soon. Similar to the dot-com bubble, many AI startups are not profitable yet. Many of them will likely go under or get acquired by other major players. Eventually, many AI companies will find the right business models and build the right AI apps that will also be profitable. Also, there will be many AI applications, AI agents, and enterprise AI software going forward. The best AI companies such as OpenAI will become much larger and more profitable later on. This is similar to the dot-com bubble. A few companies such as Amazon, eBay, Google, and Microsoft survived the dot-com bubble. Now they are much bigger and much more profitable than before. If you have been following the semiconductor industry, you will know that Nvidia is a near monopoly in the AI server market that targets large enterprise and data center customers. Nvidia also dominates in the consumer GPU market. In fact, according to analyst estimates, Nvidia has over 90% of the AI server market. This has been the trend for many years. In terms of competition, Nvidia will face a lot more competition from the hyperscale cloud providers. Nvidia's largest data center customers are making their custom AI chips because they don't want to rely 100% on Nvidia. It's very expensive to buy Nvidia's AI GPUs. Each Nvidia AI GPU can easily cost between $30,000 and $35,000. If you want to build your AI data center, you will need to invest in thousands of Nvidia's AI GPUs, CPUs, DPUs, NVLinks, and networking switch. All these AI investments will cost at least several $million to several $billion. Here's the important part. Even though Microsoft, Meta, Google, and Amazon are all making their custom AI chips, they are mostly for internal workloads. They do not sell their custom AI chips to other companies. Similar to the consumer GPU market, AMD will continue to be Nvidia's biggest competitor in the AI server market over the long term. I will talk more about AMD in a separate video. In terms of financials, you can see that Nvidia has a very strong balance sheet. At the time making this video, Nvidia has $31 billion in cash equivalents and $11 billion in total debt and operating lease liabilities. This means Nvidia can pay off all its debt and operating lease liabilities in advance and still have around $20 billion cash left. Let's talk about Nvidia's long-term growth prospects here. I will explain why I believe Nvidia will likely surpass Apple soon, or even Microsoft, especially after Nvidia starts selling its next-gen Blackwell platform to data center customers and large enterprise customers. The biggest reason is this: I believe Nvidia's AI data center business, which is Nvidia's most important business, is still in the fast growth stage or the scaling stage. Many hyperscale cloud providers, large enterprises, and tech companies are still building out their AI data centers. Also, many countries outside of the US are starting to invest in AI data centers because they don't want the US to be the only major leader in AI. In comparison, Apple's iPhone, iPad, Mac, and iOS businesses are much more mature. This is why I believe Nvidia will likely surpass Apple's market value soon, or perhaps even Microsoft. Let me explain more here. Beth from IO Fund made this excellent analysis. She summarized analysts' data center revenue forecast for Nvidia. Here, you can see that Nvidia's data center revenue growth is expected to peak in 2023 or 2024. After that, Nvidia's data center business is expected to still grow steadily, but of course, it will be at a slower pace than before. The biggest key takeaway is that the upcoming Blackwell platform will drive Nvidia's data center growth starting in late 2024 and throughout 2025. If you want to estimate Nvidia's growth going forward, you have to understand Nvidia's product roadmap and Nvidia's growth strategy. Before, Nvidia used to release a new GPU architecture every 2 years. Now, Nvidia is releasing one new GPU architecture every year. This is a very aggressive product roadmap. I think the biggest reason is that Nvidia wants to stay well ahead of the competition going forward. For example, Nvidia is planning to release its next-gen Blackwell platform by the end of the year. After that, Nvidia is expected to release the X100 AI GPU in 2025. According to another source, Nvidia is planning to release the next-gen Rubin architecture in 2025 and the X architecture after that. Both of these new architectures will be even more powerful and more energy efficient than the upcoming Blackwell platform. Here's another source that suggests that Nvidia will likely sell a lot of Blackwell this year and even more Blackwell in 2025. According to supply chain sources, Nvidia is expected to sell around 500,000 Blackwell GB200 AI chips this year in 2024 and as much as 2 million in 2025. This is from the most recent earnings call. Nvidia CEO Jensen Huang said that Nvidia will sell a lot of Blackwell in the upcoming quarters in addition to the current gen Hopper. Our production shipments will start in Q2 and ramp in Q3, and customers should have data centers still out in Q4. Here's the most important part. He said, we will see a lot of Blackwell revenue this year. Nvidia's management also said this. It explains that there is still a very large demand for Nvidia's current gen Hopper H100 and H200 GPUs, while Nvidia is transitioning to the next gen Blackwell platform. Nvidia's customers don't want to wait for Blackwell to be available by the end of the year. It takes many months to train and build their AI models, so they're buying a lot of H100 and H200 AI GPUs while waiting for Blackwell. From a product perspective, the vast majority of compute revenue was driven by our Hopper GPU architecture. Demand for Hopper during the quarter continues to increase. While supply for H100 improves, we're still constrained on H200. At the same time, Blackwell is in full production. We're working to bring up our system and cloud providers for global availability later this year. Demand for H200 and Blackwell is well ahead of supply, and we expect demand may exceed supply well into next year. Blackwell will be available in over 100 OEM and ODM systems at launch, more than double the number of Hoppers launched and representing every major computer maker in the world. This will support fast and broad adoption across the customer types, workloads, and data center environments in the first year shipments. Blackwell time-to-market customers include Amazon, Google, Meta, Microsoft, OpenAI, Oracle, Tesla, and xAI. I want to show you Nvidia's growth strategy here. It shows that Nvidia is expanding to other industries and not just expanding in the cloud computing industry. Here's the important part you should know. The hyperscale cloud providers such as Microsoft Azure, Google Cloud, Amazon AWS, and Oracle Cloud are Nvidia's biggest customers because they buy hundreds of thousands of AI accelerators, InfiniBand networking switch, NVLink interconnects, DPUs, and other networking devices from Nvidia every year. For example, these hyperscale cloud providers contributed about mid-40% of Nvidia's data center revenue in the most recent quarter. Other major tech companies such as Meta and Tesla are also buying hundreds of thousands of Nvidia's AI GPUs almost every quarter because they need the best AI GPUs and the best AI software stack to accelerate their AI models and AI applications. If they don't invest in AI now, they will be left behind by other major tech companies that are investing in AI. Here's a very good example. Do you know that Tesla's full self-driving FSD V12 software was trained using thousands of Nvidia's AI GPUs? FSD would not be possible if Tesla did not invest in thousands of Nvidia's AI GPUs. It is very expensive to buy these AI GPUs and build an AI training cluster. According to Tesla, Tesla will continue to increase its core AI infrastructure capacity in the coming months. This means Tesla will continue buying more H100 GPUs and the upcoming Blackwell platform from Nvidia going forward. Other than expanding to other industries, Nvidia is also expanding to other countries outside of the US. Right now, there's a huge demand to build AI data centers in Europe, Asia, and other countries outside of the US. Many countries are starting to invest in AI data centers using Nvidia's latest AI accelerators and networking devices because they don't want the US to be the only major leader in AI. These countries want to protect their own culture and data and accelerate their own AI infrastructures instead of relying on US-based cloud providers. This is called sovereign AI. Management said this in the most recent earnings call. From a geographic perspective, data center revenue continues to diversify as countries around the world invest in sovereign AI. Sovereign AI refers to a nation's capabilities to produce artificial intelligence using its own infrastructure, data, workforce, and business networks. From nothing the previous year, we believe sovereign AI revenue can approach the high single-digit billions this year. The importance of AI has caught the attention of every nation. Here's the most important part of Nvidia's accelerated computing business. This is one of Nvidia's biggest competitive advantage. It is nearly impossible for other competitors to copy Nvidia's business model and Nvidia's accelerated computing ecosystem. Other major competitors such as AMD and Intel are far behind Nvidia in AI hardware and AI software stack. This is why Nvidia owns over 90% of the AI server market. Nvidia sells the AI hardware and AI software stack, or the picks and shovels, to companies such as OpenAI, xAI, Meta, Google, Microsoft, Amazon, and Tesla that are building their AI infrastructures. So regardless of which AI company wins in the long run, Nvidia will still be the biggest winner because Nvidia sells the AI hardware and AI software, or the picks and shovels, to almost all the major tech companies, hyperscale cloud providers, and AI startups. Nvidia's biggest competitive advantage or economic moat is its CUDA software platform. AMD is Nvidia's closest competitor in the AI server market and the consumer GPU market. Even if AMD makes AI accelerators that are as competitive as Nvidia's H100, H200, or the upcoming Blackwell platform, AMD's AI software called ROCm is still far behind Nvidia's CUDA software platform. Based on what I know, Nvidia's CUDA is at least 10 years ahead of all the AI software platforms. In fact, Nvidia's CUDA is almost like Apple's iOS ecosystem. It's extremely hard to develop a new ecosystem to compete with Apple's iOS ecosystem. I believe this is very similar to Nvidia's CUDA ecosystem. Based on what I know, most AI developers learn to code and program using CUDA first when they are building their AI applications and AI models. In fact, most AI models and AI applications are built on CUDA. As of now, there are already over 5 million developers using CUDA, over 19,000 AI startups use CUDA, and there are hundreds of millions of NVIDIA GPUs around the world that support CUDA. Here's an important part: NVIDIa's proprietary CUDA software is not open source. NVIDIa's CUDA software only works on NVIDIA GPUs, so AI developers are forced to buy NVIDIA GPUs only, not AMD GPUs or Intel GPUs. If you're an AI developer, you will likely invest in NVIDIA's AI GPUs and CUDA to build your AI models and AI apps, because NVIDIA has the best accelerated computing ecosystem, the best AI GPUs, and the best AI software called CUDA. I want to show you this forecast from AMD and NVIDIA. AMD CEO Dr. Lisa Su believes that the AI server market will grow from 45 billion in 2023 to as much as 400 billion in 2027. Nvidia gave a very similar market forecast. Nvidia expects that the company's total addressable market is around 450 billion in AI data center systems, AI enterprise software, and DJ's cloud. This is very similar to AMD's market forecast. So if we consider all the secular trends, market forecasts, the long-term growth prospects in AI, and the competitive advantage I talked about earlier, I believe the current AI revolution will continue to benefit Nvidia the most over the long run. These consensus estimates are from Seeking Alpha. As of now, Nvidia's revenue is expected to grow nearly 100% year over year in 2024. After that, Nvidia's revenue growth is expected to slow down to double digits over the next several years. Nvidia has consistently beaten analyst forecasts in recent quarters because of the enormous demand for Nvidia's AI GPUs, so I wouldn't be surprised if Nvidia continues to beat analyst forecasts this year and next year. In terms of EPS forecasts, Nvidia's EPS is expected to grow slightly over 100% year over year this year. After that, Nvidia's EPS is expected to grow double digits each year over the next several years. In terms of valuation, at the time making this video, Nvidia's forward PE is around 41. This is similar to Nvidia's PE back in October 2022. I think this suggests that Nvidia is likely fairly valued or even undervalued now. I always use this intrinsic valuation model to calculate each stock's intrinsic value. You can use it to calculate Nvidia stock's intrinsic value here, so you will know when Nvidia becomes undervalued, fairly valued, or overvalued. If you want this intrinsic valuation model, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define Nvidia's intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 11% here. You can use a higher discount rate here if you want to be more conservative. Based on the long-term growth prospects and the biggest risk I talked about earlier, I believe Nvidia's revenue will grow somewhere between 90% and 100% year over year this year. This matches analyst forecasts. After that, I believe Nvidia's revenue growth will slow down to double digits, which should be more reasonable. I estimate that Nvidia's revenue will grow at a compound annual growth rate CAGR between 12.5% and 17.5% annually over the next several years. I believe these revenue growth forecasts are more reasonable. It will not make sense for Nvidia's revenue growth to continue growing triple digits each year going forward because Nvidia's total revenue is much larger than before. I'm using a very high 44% free cash flow margin here because Nvidia has a near monopoly in the AI server market, and it's extremely hard for competitors to compete with Nvidia in both AI hardware and AI software stack. Let's go over these three case scenarios: worst case, normal case, and best case scenarios. Under the worst case scenario, we're forecasting that Nvidia's revenue will grow 90% year over year this year. After that, we're forecasting that Nvidia's revenue will grow at a CAGR of 12.5% over the next several years. Then Nvidia's intrinsic value should be around 2.89 trillion for the entire company, or $1,163 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we're forecasting that Nvidia's revenue will grow 95% year over year this year. After that, we're forecasting that Nvidia's revenue will grow at a CAGR of 15% over the next several years. Then Nvidia's intrinsic value should be around 3.23 trillion for the entire company, or $1,298 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting that Nvidia's revenue will grow 100% year over year this year. After that, we're forecasting that Nvidia's revenue will grow at a CAGR of 17.5% over the next several years. Then Nvidia's intrinsic value should be around 3.6 trillion for the entire company, or $1,445 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Nvidia's intrinsic value should be around $1,301 per share. I also use a 4 sales valuation model to estimate Nvidia's intrinsic value, which should be around 2.5 trillion for the entire company, or around $1,022 per share. If we take the average of both valuation models here, I believe Nvidia's intrinsic value should be around $1,161 per share. This is before the upcoming 10-for-1 stock split that will happen in early June. After the 10-for-1 stock split, Nvidia's intrinsic value should be around $116 per share. Now, splitting the stock does not affect Nvidia's intrinsic business value. It just makes Nvidia's stock more affordable for retail investors. Just to compare, Morningstar gave Nvidia a slightly lower fair value of $1,050 per share. This means I believe Nvidia is either fairly valued or slightly undervalued at the time making this video. In the past, I underestimated Nvidia's growth many times. I would not be surprised if these growth estimates are still too conservative. So will I buy Nvidia stock? Yes, I will continue buying more Nvidia as long as it's still undervalued below my intrinsic value estimate. I believe we're still at the beginning of the AI revolution. There will be many AI software and enterprise AI applications that will be very profitable in the future. I think it's extremely hard for competitors to compete with Nvidia's accelerated computing platform, AI hardware, AI software stack, and CUDA ecosystem. This is my prediction. I believe Nvidia will continue to dominate the AI server market and maintain the largest market share, over 70% in the long run. I also expect that AMD will be the second largest player in the AI server market, similar to its position in the consumer GPU market. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.